Investors now holding their collective breath for the words of Jerome Powell Friday in Jackson Hole, Wyoming. Yahoo Finance's Brian Cheung will be there. He covers the Fed for us and joins us with the preview. Presumably, we're going to hear a lot about data-dependent and a lot more work to do.
Yeah,
what do you think?
Sounds like you could write the speech already, Dave.
I'm good.
You're good. I mean, look, at the end of the day, when it comes to this Jackson Hole event, it's usually about 120 inside baseball economists. That's usually who the Fed chair is addressing in these speeches. But this year, an argument to be made that he's going to be speaking directly to markets. And the big reason for that is because the markets went in the opposite direction after the Fed had that July meeting where they made that very large 75 basis point hike at the end of July. Now, you recall that after that, stock market rallied. And then bond yields somehow went down. That's not what the Fed wants to see because it says we're going to continue to raise interest rates until we see inflation get closer to our 2% target. Deutsche Bank said it, having incorrectly taken his July comments as dovish, the chair likely to skew his comments in a hawkish direction in an effort to ensure the Fed's inflation-fighting credentials are not questioned again. The one thing you won't get from that speech, what the Fed's going to do in September. The reason why? We get another CPI report. And we have another employment report before that meeting. The Fed doesn't want to get ahead of that. Markets right now at a toss-up between a 50 versus a 75 basis point hike in that meeting.
Hence the data-dependent. What could he say that shocks the market?
Well, one thing that he could say that shocks the market is simply that the Federal Reserve is not afraid to do more outsized hikes if it shows that inflation isn't indeed coming down as they want it to go. Now, one reason why markets have essentially gone off to the races over the last few weeks is because of that CPI report that showed no month-over-month change in prices. But what has to happen? It has to go down. It can't plateau. If you get an August, September, October report where it continues to plateau, that's still not good enough for the Fed. No reason in that case why the Fed wouldn't go with more 75 basis point hikes or even larger than that. That's the other type of risk that the markets are not pricing in right now because it seems like a lot of investors are saying, we kind of feel like we know when the Fed is going to stop. Some pricing is the end of this year, maybe the beginning of next year. The Federal Reserve is not putting a time sequence on that. That's what the market assumes. Right. That's going to be a real challenge if the Fed communicates, look, we can continue. The beatings will continue until market morale improves.
What would really shock the markets is you in hiking boots and a fleece vest in Jackson Hole.
I might bring my hiking hat out there, yeah.
Yes. Mountain man Brian Cheung with us. Good to see you, my friend. Safe travels.